Hello everyone, welcome to the Ichimoku daily analysis for gold for Monday, April the 4th, 2011. Well, a change of trend today in this candle, and we can see that we've got a candle that's made a higher high and a higher low. Previous candle we had a candle with a lower high and lower low that was attracted back towards the Kijun-sen. Today's trading, the market tested their resistance once again at 1440. And we can see from this candle that there was downside price rejection. And the large shadow on the top of this candle shows us that the buyers have lost commitment in this market throughout the trading day. Now, they did close this market just down below the midpoint level, which means that the sellers actually closed this market in control, although only a fairly weak amount of control. The buyers did have some sort of a victory by establishing a green-bodied candle, which means that they made net bullish progress on the day between the open and the close, rather than the sellers in the previous day's candle. So almost a mirror image of the previous day's candle with the upside price rejection, but today the downside price rejection. Now this market is trading between solid resistance and support, and the support is offered by the flat Kijun-sen here. We can see it's been tested on 1, 2, 3, 4 occasions now out of the last 6 trading days, so at a very important level at 1414 there. By the same token, the resistance at 1440 is very important because it's been tested and the market's failed to close up above that area. We can see 1, 2, 3, 4, 5, 6, 7 tests on that area. Very, very strong area for this market. Up above there we have resistance extending up to 1445 and 1448.5. So this market is certainly not wanting to trade higher. It's finding this area, this region extending from 1440 up to 1448 as a very, very important barrier for this market. Now, just looking at potential chart patterns here. Here we have a prior uptrend and a very strong uptrend, and this is some sort of a diamond pattern. Here we have the margins of this diamond indicated, and they're not indicated quite neatly. We could perhaps vary this a little bit, but diamond patterns are usually very significant patterns at the end of an uptrend, and they tend to be reversal patterns, although this could be a bullish pattern, a continuation pattern, but they do tend to be reversal patterns, so there is a very real danger that this market may correct. If we do see a solid breakout below this barrier at the right-hand edge to the downside, then there is potential for this market to retrace fairly substantially. Now, we would need to see, however, a bearish close outside of that barrier. So it would need to be a very strongly bearish close. Now, having said that, though, basically this is a large congestion area, and it takes a certain form. So there is still potential for the breakout to the upside, but we need to be patient and wait for that breakout. So diamond patterns are usually very, very important patterns. Now, in Ichimoku charts terms, this market is still trading up above the cloud, so we do have a market which has an overall positive bias. The market is now starting to trade closer and closer towards the cloud, and that means that in this big picture term, long-term time frame, the market is trying to find an equilibrium, and that equilibrium is designated by the cloud. With the other Ichimoku indicators, the Kijun-sen, the market's trading up above the Kijun-sen and maintaining its bullish indication in the medium-term time frame. And the market is also just trading up above the Tenkan-sen, which means it's bullish in the fast-term time frame, although only just pretty much neutral to bullish. The Kijun-sen, as we mentioned, has turned flat, and wherever that is flat, there is a good probability that the price action will be attracted back towards there. So we could see the market move back down towards this 1414 level over the next day or so. Now, to the downside, if the market does correct, then we do have obviously that support that we've just mentioned, and then certainly no very strong support below there until we trade down to this previous resistance area around 1393, which coincides with this upside price rejection around 1390, and then certainly down at 1380 there was very good solid support. That may mean if we do trade down there that the market is interacting with the cloud, and we have a very thin cloud at that level there. Offers very thin support for the market, although it will offer support. As the market continues, however, if we do, depending on how long it takes us to trade down there, if we do, then that cloud will become thicker. So the cloud will offer a much more substantial area of support if the market does test down around those levels. Now, because the support and resistance offered by Ichimoku indicators is dynamic and it's moving as we move into the future, the support offered by the top of the cloud will actually come up to meet the price action. So the support is actually moving higher. So there is a chance that if the market doesn't retrace all the way back down there, then we will be interacting with a much thicker amount of the cloud in future, but also that support will be much stronger. Now the Chiku span here, if we look across here to the Chiku span, it's actually trading up above the corresponding price action. So that's confirming this bullishness that we're seeing in the market in the longer term time frame. So if we do have this breakout to the downside, then there are limiting factors, and we could potentially see the market trade down to around 1380, 1374 and test down around these areas. Certainly the first test could be at 1414 again with the Tenkan-sen, but look for a breakout, or a potential breakout from this type of diamond pattern to the downside. Potentially the most significant will be a very bearish breakout if it does occur.